Good afternoon, everybody. Uneducated Economist here. So for the last week or so, I have put out a number of videos talking about rising interest rates and a stronger dollar, and that's exactly what happened over the course of the last week. I caught a lot of flack from it in the beginning, like the first videos that I was talking about a week ago, saying that we were going to see higher interest rates. People said there are no way the Federal Reserve was going to allow interest rates to rise. There's no way that the government can, make its payments, stuff like that. I am not of the belief that the Federal Reserve is in control of the 10-year Treasury and where the yields can be. Now, they do have a tool called yield curve control and yield price control. Pretty much the same thing, where they pick a certain maturity, like say they pick out the 2-year or the 3-year or something like that, and they say we are not going to allow interest rates to go over a particular spot, like say 1% or something like that. They'll just pick a number, and if treasuries start to go over 1%, they'll buy them in any amount needed in order to get those interest rates, the yield on that particular treasury, to drop below their target. That would be yield curve control. They are not doing that right now. They have quantitative easing, where they're buying up treasuries at a set amount, $80 billion a month. And now this is giving the government the capabilities to do the stimulus spending. They pretty much said it. We are going to keep our interest rates low for the foreseeable future and stay accommodative for the government to go into their stimulus spending. And that's what's taking place right now. Here's the thing. When you had quantitative easing, okay, the Federal Reserve said that we are going to pretty much print up money and start buying treasuries. The investors out there, the markets, they went, holy moly, the Federal Reserve is going to start buying up a whole bunch of treasuries? We better front run the Fed. And so they went out there and they started buying up a bunch of the treasuries too. And so there has been like a continuous uptick in the price of bonds as the quantitative easing has caused the interest rates to go down and the prices to continue to rise. The Federal Reserve has pretty much guaranteed there will be demand for the treasuries. Right now, we're seeing the 10-year treasury rise. We've been seeing it tick up for quite some time. And over the course of the last week, we've seen a significant move. See, anytime that everything starts going in one direction, you got to think things will shift. Nothing can continue on in that direction. People will start to take a profit. They will get worried. Something will happen that will cause the shift. And once the shift takes place, the move is on. Whether it's a sell-off or a rally. And now, if you think about what's going on right now, the government, is talking about more stimulus coming into the future. And the markets hate this idea. This is going to cause inflation. This is going to be quantitative easing, and it's going to be inflation if the government goes into more stimulus spending. This is what used to get the interest rates to drop. This is what used to get people into treasuries. Now they're looking at it going worried, and they're saying, hey, we don't want a hold of this. If we're going to see inflation into the future, then we want more yield for these bonds. And the interest rates start to rise. See, if they didn't put that inflation narrative out there, if they said we don't see inflation for the foreseeable future, then they wouldn't have had any problems with the 10-year treasury. They almost did it on purpose. They know that there is going to be an asset bubble. It's already taken place. The houses are already off the charts expensive. And if they continue on with the low interest rate and the quantitative easing, then we're going to continue to see the asset prices rise. But if you put out the narrative that there's going to be inflation coming into the future, and the people start behaving in such fashions that they believe that there is going to be inflation in the future, then you're going to start seeing the interest rates rise. The market is going to start demanding more money for their future, for holding onto their money to the future. If they didn't see inflation, the interest rates wouldn't go up. The Federal Reserve put that information out there on purpose. They want to see the inflation rise. They want to see the asset bubble not pop, but cool off. I don't think they would honestly want to pop the bubble. They want the bubble to grow, but they don't want it to grow in such a fashion that it actually blows up on itself. This is like pressure relief, what they're doing. That's a good way to look at it. It's pressure relief. So, like I said, if they had put out the narrative, if they had put out the thought that there is no way that we see any inflation coming into the future, like, like they did a couple of years ago. Think about, what is it that the Federal Reserve has done that's any different from what they were doing over the last decade? They print up money, they buy treasuries and mortgage-backed securities. There's nothing else. Dropping interest rates to zero. That's it. They're done. Monetary policy has come effectively to an end. That's it. There is nothing left for them to do. There is some other tools in the toolbox, and the main one that they're using right now is called jawboning, forward guidance, credible threats. And for every action, there's an equal and opposite action. So you think about it. The Fed goes out there and says, we see, we're going to let inflation run hot, extra hot, for an extended period of time. What do you think the people are going to do? They're going to be like, holy crap, we better do something about all this inflation that's going to be coming. And we know it's coming because look at all the quantitative easing. Look at all the supply side of things. And then I put out probably 5 videos talking about how I believe that there is going to be higher interest rates and a stronger dollar. And what do we get? Higher interest rates and a stronger dollar over the last week. Is that going to continue? Probably not. Will it spike sometime, the dollar strength? Absolutely it will. Will it last forever? No. At some point, the dollar will fade away and will not be the global reserve currency. Something else will take its place. Excuse me. But I have no idea what that'll be. Oh, excuse me. Well, anyway, I'm about ready to cough, so I'm going to end the video here. Uneducated Economist, you guys let me know.